Welcome back to another trade recap, y'all. Today, I'm going to go over the strategy I used to catch 10 risk reward, catching two winners today. One was during New York session and the other one was during Asia coming into London session. So without further ado, if you want to stick to it and learn the entire strategy for free, here it is. So yeah, let me go over it first. Basically, the first setup I'll go over is the setup from New York session today. So during New York session, there's this thing called different ratings for your setups. You have A plus setups, you have A setups, B plus, and B. Usually I categorize my trades in 4 different types of quality of setups. I don't like doing too much, so I don't think you guys should too, but 4 different categories of setups. And this right here was a lower probability setup, this is a high probability setup, lower probability entry model. But yeah, let me just go over it today. So as you can see here, we have our liquidity sweep here. So this is part of my A plus checklist here. Okay, we must have a liquidity sweep. Why is this a liquidity sweep? Well, because this low made this new high. If we go to a different time frame, it probably will look a lot more clear. Maybe like 15 minute, 5 minute, you can clearly see we have this pullback. It made a new high. And the current trend is bullish, okay? If you look at the trend here, we are clearly bullish on the right. So you want to be following this trend here because I think my drawn liquidity is pretty stay high here. And so I'm just sticking to the trend here, trading with the trend and not trying to go against the market. But yes, there will be times, yes, you will be able to get counter trend shorts. But I do have a checklist for also counter trend trades that I teach within the course on when to use those for B plus setups and when to avoid counter trend trades that rarely ever work. So that's going to help you guys out significantly when it comes to your trading. So anyway, yeah, I'll go over a 7 hours trade later, but let me go over it with today's trade on your session. So we have our liquidity sweep here, meaning price has to take out this liquidity or take out this low. So essentially, if you go in replay mode here real quick, basically I was waiting for, you can set alert here if you want, whatever you want to do. I was just watching the chart here, waiting for this to get taken. Once this gets taken here, then I'm looking for an entry model. So I'm looking for an entry model. Now we have an inversion here, okay? As you see, if we play one more candle, I believe my indicator should mark it soon. It's an inversion there, and we also have an OB entry model here. So we have 2 different entry models, gives us high confidence that this trade would play out. Not only do we have a liquidity sweep, we also have our confirmations. So now that we have those, I'm just waiting for my entry model. So I have this other OB here. This is a sell to buy here. So this OB here I can utilize as a limit order. So I place my limit order at this OB right here, right below this stop hunter low. Why is this a stop hunter? Because stop hunter goes off internal structure. And internal structure here is candle to candle structure where essentially this low made a new high. So I took an entry there. Again, no market execution here. This is just a pure limit order. Where do I place my stop loss? Prior to mitigation, which is what I talked about within the course modules. If you don't understand that, you should probably go back and rewatch that section. But that's what I was doing in terms of my stop loss. So now that we have that for my stop loss, my target was just the next high. And I'll explain briefly why my target was not like something like this. And I was being more realistic today. One of the first things was obviously my indicator was pointing bearish. So it kind of goes against my current trend that I'm looking at. And that basically just makes things a little bit lower probability. Despite the technicals telling me it's bullish, my indicator is pointing bearish. So that's number one. Number two is that my stop loss, this is the main thing. The stop loss is not a good placement, okay? So if you look here, my stop loss here is placed not at the extreme low. If we're looking for a big move, you want to have your stop loss placed at the extreme low, not something super aggressive like where I place my stop loss right here. Because what price can do is take out this high, then we come mitigate something like this, for example, and then come all the way back down here to mitigate this origin and then expand. And so even though you get the direction correct, your timing is not correct in terms of your, or not your timing, but in terms of your stop loss placement is not correct. So that's going to affect your win rate. So that's why I just took my 3.11 R here. I could have targeted in hindsight short an extra R, but that's okay with me. I don't mind it. It's not a huge deal. Again, as long as you can maintain a solid win rate, maintain your solid mental edge, that's all you need. So yeah, that plays out here as you can see. And later we get, internal sweep here in the 5-minute supply, and ultimately price, I believe, let's see what happened here. Price mitigated the origin, and that's where price is currently trading at. And I do believe at this current point in price or time, price should be taking out New York session high here, and at some point taking out previous day high. So this is why it's very important, guys. It's very important to, you know, understand the probabilities when it comes to where you place your stop loss. Again, if I place my stop loss here, I don't mind you going for this high here. Why? Because your stop loss is placed in the logical area where it makes sense with your target. Remember, whenever you're placing a trade, you want to factor in your target and your stop loss. Both are equally as important, because if you have a bad target, let's say up here with the bad stop loss, you're gonna get stopped out. Okay, you need to have a balance of both a good stop loss and good TP that work in correlation with each other. If that's the one thing you want to take away from today's trade recap, that's what you should be taking away. And you only know this if you've done enough backtesting and collecting data on your system, knowing how your strategy works and how the market truly moves. Because market moves off expansion and mitigation. That's all it does, liquidity, nothing else, okay? So that's why we're able to predict the market so accurately with my strategy. This was a 3R, like I said, and let's see how much R I could have made. I could have squeezed out almost double, but that's okay. And there was another setup, as you can see right here, using my indicator, okay? Where you see the IFG, indicator R marks it. Again, if you want access to indicator, link down below in the description, you get access to all 7 here. And you could go something like this. But anyway, I'm done trading for a day here, so that was my setup here. And then let me go over the 7R setup. So for the 7R setup, here it is. It's the same idea, guys. Same concept, just different entry model that I teach you guys, but the same confluences. What's the trend? Bullish. We have breaks, we have breaks, and we have multiple breaks. It's not just one. Break, break, break. We have 3 breaks here. All right, so we're just following the trend here. And let me go back in replay mode here. Now, waiting for the A+ setup. Wait for the liquidity sweep. Slow made this new high. Wait for that liquidity sweep. You go to the 5-minute. There's also a 5-minute PY right below, which is, can be added as extra confluence, okay? Because it basically means that price not only took out liquidity or external liquidity, but also mitigate something right below, which means you can get less attempts to take this long, because what happens is sometimes we take out liquidity, don't mitigate anything, and then we fail, and then we go mitigate the thing. So if we can take out liquidity and mitigate at the same time within the same entry model, then that's even better for us in terms of probabilities. So this was a trade here. If we can switch time frame, see if there's anything else. There's a 30-minute demand there. Don't think there's anything on the 1 hour, but ultimately, yeah, the 5-minute demand there looks good, right under the liquidity sweep. So once liquidity sweeps, again, set alert, whatever you want to do. Boom, I enter here using my limit order, using my OB entry model. Again, never, ever, ever. I tell you guys this all the time. Don't have your stop loss like equal highs and lows. That's liquidity. It's gonna get taken out. Okay, I don't trade it personally, but I'm just saying you never want to have your stop loss at the exact price point of an extreme high or low. Give it some breathing room. This is how you can avoid getting stopped out prematurely, because the market's not perfect. Okay, there's gonna be times where not only is there divergence between ES and NQ, but there's gonna be divergences between micros and minis. Okay, a lot of people don't know that there's divergence between micros and minis, because they don't have the market experience or they've never seen it before. But I'm just telling you now, ahead of time, that there is divergence between micros and minis, and that's something you should take into consideration and value. So because of that, you want to be careful, right? For example, I'm on the minis chart because I trade minis. A lot of you guys, I'm sure, trade micros because you can size properly or better, easier. But basically, this could happen on the micro chart, and you get stopped out or something like this, for example, right? That's why you want to give your breathing room always some space. Set a rule for yourself. For me personally, I do at least +1 tick on ES, and on NQ, you might have to give it a few more ticks. All right, so that was my trade. I entered there, and as you can see, price, did a mitigation real quick to mitigate this supply, came back, mitigate this demand, and ultimately flew. So if you miss this initial entry, there's another entry here for even better RR, matter of fact. But, this is a set and forget kind of trade. I don't go break even just because this is my A+ setup. Liquidity sweep into a PUI that's unmitigated. And where is my target, you may ask? There's 2 targets you can have on this trade. Technically 3. The first target is just something conservative within the range, okay? But we're bullish, so we want to squeeze the most out of our trade. So you're targeting at least the next week high, which is 5RR, or targeting something looking to the left. So what did I see to the left here? I looked at this high here. So whenever we have a new trend on the right, in a big range like this, you're looking for highs and lows on the left because price reacts off of those. So here's an example. This is a high here. Why is this a high? It's a bullish candle pullback, right? And it made a new low. This is a high because this high made this low. This is a high, internal high, because this high made this low, or sorry, made this low here. So this is your external high, for example. This is your internal high, right? External made an external break. This internal made this internal break. So if you look to the left for highs and lows, you'll see where price reacts off perfectly. Took out 8 session high here, and you don't take this first entry. You can, again, low probability. If you're taking counter trend, you want to wait for more confluences, more liquidity to be taken out. You wait for this next high here to get taken, or you even can wait for this high. But like I said, I'd rather trade with the trend most times. And I'm sure you can make more RR, to be honest. Taking counter trend trades as well, but your win rate might suffer slightly. But again, that's something you do need to test to make sure. You can't just come to that logical conclusion. But overall, logically, it makes more sense if you trade with the trend, you're going to have a higher win rate than someone that does both. Unless you're looking for my B+ setups, that's a different story, which again, do your backtesting, learn the strategy, and you'll know what I'm talking about. So you can see here, reacted off that high. That's why we had this reversal here, and I'm not surprised at all. Now we take out liquidity, tapped into unmade 5-minute PY, and I'm targeting this next liquidity point on the left here, which is that high. Again, either you're targeting the next week high, external week high, or a high off the left, or liquidity off the left. So 7.76 RR is what I got out of this trade, and it ultimately hit TP at some point here. And I was not scared during this pullback. A lot of people would probably exit and panic and sell here, and exit probably at 3RR, which is half of what you're aiming for before, and they might even go short here, which is awful. Why? Because you're shorting in discount. We have new inducement here. We have a PY right here, okay? And we tapped into this, made an entry model go to the upside. So if you missed this initial 7R trade, there was another setup here you could have taken, all right, for 2RR. It's not a whole lot, yes, but what can you expect when you're buying higher, right, up here, right? Instead of buying at the low here for the A+ setup. You're basically taking almost a continuation type of trade off the A+ setup. So anyway, I was not scared there. As long as I saw an entry model, I was like, okay, I hold, this is completely fine. If you want to trail your stop loss for this trade, you also can do that. What I would do is, once I see this entry model, I'll trail to this low here because this low should hold. Now, sometimes we do get internal sweeps like this. So you could also put your stop loss at this low here, okay, covering the PY. Again, give it take some wiggle room, so maybe something like this is a good trailing stop loss. In worst case scenario, price does come back down here. If this gives you another entry model, you can take it to the upside there. And lastly, you can see price did eventually take out this low because this low made this high. All right, so just keep in mind, you don't want to go for crazy targets, right? I'm taking this trade. I don't want to be going for this entire gap fill or something all the way up here because at the end of the day, we're 1-minute traders. Okay, I'm teaching a 1-minute strategy. You can get fast TPs, but you need to make sure that your targets make sense. And then later you can see there's a lot of continuations to go taken here to the upside. A lot of chop though, for sure. You can see during London session. London session is not ideal also, by the way, if you're trying to trade NQ indices. London session has, I believe, statistically the worst win rate, okay? ADA session sometimes is even better. So I trade ADA session and New York for the most part. But at the end of the day, if you can reprice, you can trade any session you want. That's the whole gist of timing in the markets, in my opinion. So anyway, hope you guys do enjoy today's video. If you want to learn more from me, click the link down below. And I'll catch y'all in the next one. Peace.